And yes, I'm back, guys. It's been a while, and I'm back to trading. Though I did not leave, but I took a time off, just a time to clear my mind. I've been checking the charts on the sidelines for a while, but I just took time to focus on something else that I've been working on. But I'm back, and I think I'm better. And without much ado, let's go straight into the video, guys. Welcome to this video, and in today's video I'm going to go through, as I do monthly, I'll go through the trades I took in the month of January. One of the little things I had to do in the past few months is to try to get my strategy right. And if you notice, before I target about 1 to 5 per trade, but recently I had to think about it due to the evolution of prop firms and all the demand. And because of FTMO, which is a leading prop firm, we noticed that if you don't have a consistency rule, I think everyone is trying to implement that. And so if I just take one trade in a month, which I've been doing, and get it, I might flaunt that rule. So I had to go back to how I trade using the 1 to 3 strategy, and it just means I will take more trades in a month, which is fair, and is something that I can do most likely. And yes, that's all I've been doing and thinking about, and trying to gather data and to get back into the game. Again, I'm just a student. I'm just looking for a way to invest, and that's why I got into this, and here I am. Without much ado, so I don't keep ranting, because it's what I love to do. Let's go straight into the charts. So yes, if you see the data I have here on my Excel sheet, again, if you ask, I can give this to you. It's really simple. I just had some formulas somewhere around the dates, and I just have a means to calculate it and to see my yearly return. So if I look at my yearly data, if I was risking 2R, then I will have almost doubled my account, and which is something I might be doing even for my large accounts. I think it's high time I begin to think post prop firms. I want to begin to think, okay, how much will I get? How much can I gain while investing? And I've noticed with the data I have, for instance, you can see, let's say for July, which is what I'm looking at, this is how to think like a trader. I'm going to do a separate video on this, but let's just do a rough analysis. Now, you can see in July was quite crazy. I had 1, 2, 3, 4 consecutive losses. Then I had a win. Now, why this win is like this is because there's a strategy I've been thinking about, and that's what I implemented there. But again, that's just off this video. But this strategy here would have given me this. But now notice, maybe this day I forgot, I did not, maybe I slept off or something. Now notice again, I had 2 losses in August. So this 1, 2, 3, 4. Sorry, 1, 2, 3, 4, 5, 6. So we have 6. Look at another case here. 1, 2, 3, 4, 5 consecutive losses. So it shows that on an average, if I miss some trades, I could go as much as 7 consecutive losses. And so that shows that whichever way I want to trade big accounts and I want to have peace of mind, I would have to look out for a 10 losses losing streak. That's, take 10 trades and lose. And if you're trading your personal accounts, that is, if you're risking 5%, it means you're 50% down. Let's say that was the first month you put in some money and you just took those losses, and you're trading 5% times 10 losses. That's 50% roughly, with many of the charges and all of that. Let's just say 53%. And taking the next trade might be a bit hard. So doing 5%, let's see. So for my personal accounts, I'm gonna be doing 5%. So so this is for 10%. So let me go, when I mean 10R, I mean 10 risk to reward. That's the best way. So let's just divide this by 2. I don't have 5 here, but let's divide this by 2. That means last year I would have made about 240% gain, which is good. I mean, I have, with the things I've been looking at recently, the truth is, if you can make even 2% in a year, it means you're better than most traders. Because the truth is, even I myself, I would say last year I made some money, but percentage wise, so many traders lose money. So if you can make anything above 1% in a year, it means you're almost there. It's not something you should live on. Obviously, you can't live on except if you have a lot of money. But if it's when you begin to think percentage, you can pitch to investors, you can get more capital to trade with. And that's the ideology I carry when thinking about this. And so when I transition into my personal account, I think I'm comfortable between 3 risk to reward to maybe 5 risk to reward. Am I right? No? Yeah. Is it 5? No, risk. Okay, let me say 5%. I think 5% is better. I'm looking at the best way. Sorry, I'm rusty, but I know what I mean. But let me say 5%. 5% meaning that I'll risk 5%, and on my account, and if I make 10 losses, that's 50%. But based on the data I have here, if I'm taking each as 1% and I was risking 5%, based on this data, I will have 240% at the end of the year. Again, I might just do a video explaining what I'm talking about. It's not that hard once you grab the concepts. And you can join my Telegram page or any of my social media platforms. We could fix a one-on-one call if you're free, so we can discuss some of this. But when you begin to think like this, you're thinking long term. You're thinking you want to probably leave your job. You want to see what it will look like. And so let's say you have some 100k sitting somewhere and you can get 200% in a year, and you do that consistently for 5 years. And then if you could save 100k and you could multiply it consecutively for 5 years, you can stop your job. It means you're paying yourself for 2 years. You also have some money to trade in the next coming year. So this is how I think, and this is how I plan to transition. Because if I stay with prop firms, the truth is, I'm looking at a model, but if probably I know what some of my friends are saying, which is something I might do, where the way you risk to pass the challenge will not be the way you risk to maintain the account. So I risk 2%, and if I pass the challenge, I think I will backtrack a bit and risk 1%. So again, it falls between my optimal range. That's where I can take 10 losses, even if I slept off or I forgot to be on the chart, or I'm doing something else, which I do sincerely. I would still be able to maintain the account. So once you get an account, maintenance becomes key, and that's the problem really, because you might not make as much. So in a month, probably on your profit account, maybe 2-3%, which is still fine, but that's the whole idea. That's the idea I'm taking into 2026. Without me rambling much, let's go straight into the charts. As you can see, this is the data I gathered in 2025. I would most probably do something like this too for 2026, and I'll update it in my February video, or I might go back to having live streams too soon. So let's go straight into the video, into the charts, to see what I have for this month, the month of January. So the month of January was tricky. I think it will have ended in a loss. Yes, it would, because it was a crazy month. But let me just go to the first day. Again, if you remember how I don't delete my mockups, though the chart is really messy because I have data spanning back, but I just group it. If you don't know how to do that, you could just come to Trading View. You can group data. You can see. Now what I do is that I just turn it off once I group it. And if you use Photoshop or whatever layer software, which I use a lot, I totally understood how to do this on such softwares. So yep, this is the first trade on the 5th. Again, all of the rules. It tapped into our zone. You should know how I look out for zones. If you have been following for a while, it tapped into the zone. Usually I have the New York time, which is this low. It took out the low. This low became some form of liquidity. Again, the concept of liquidity is you just want something that looks like the move is about to happen and everyone is trying to jump in. I think it's just a psychological thing and you're trying to be different from the crowd. I don't think I'm not one who believes in manipulation. As much as I know people will do, I mean, if you have some cash, if you can move the market, you and I will move the market. But those who live in the manipulation mindset, they eventually carry a victim mentality. The chart's like, it's against me and things like that. Then, they never take ownership of things they do wrong or trades they were not supposed to take. They just push it to the market maker and all of that. It's been long I listened to the market maker man. But let's go. So I'll just put this as some stop hunt or liquidity. It's just for my psychology. So once I have this, I know, okay, I'll get my entry. My entry is really simple. I just enter the last down candle when I'm going up, and that's it. So this was an easy one. It was just a sharp 1 to 2, the same strategy. It got to 1 to 2, but I did not take partials. I don't take whatever. And now the problem with taking partials, I've said it over and over and over again, is that you cannot get good data. I know you have a lot of providers that help you to backtest and take partials and all of that. I think it's just becoming too complex. So I make it as simple as possible. If you go by that, I'm not judging you. Do what suits you. But personally, if I do that, I don't see a form of consistency. So for this one, I was happy. I was looking at it. I was like, oh, the market is going my way. I think I just stepped out. When I turned back, whoosh, and then it went to loss. And that's fine. So that's -1. This -1 for the month. The next trade too was a loss. Now, so I did something, and it's something I might consider because I've seen this pattern happen always. So this next trade, it would be a 14 pip stop loss. Pardon me, this was not where I edited this. Just studying the charts, but it was a losing trade. So good. So let me go back to 5 minutes. So the first trade was on the 5th. The second trade would be on. So for most of my trades, I love to enter at. I give some space for the zone, but I put it at even numbers just above. So you can see this is how I will have put it, and this is 14 pips. It would have been a loss. Now, looking at it real good, because this is really, really painful. It's just, it's less than 0.4 pips, really small. So I noticed that this is just me thinking that anytime I have some form of fair value just above my zone, really close, something like this, it becomes a problem. So since I'm going for 1 to 3, and it's not that bad. If I could target a 1 to 5, why shouldn't I just add 2 pips to my stop loss? That makes more sense. So things like this, I would get over it. So if I put this at 16 pips, for instance, I'm targeting 1 to 3, that would be 480. Just the next even number for my stop loss. Now, I don't know if this will work consistently, but let's try it. And then 2 pips here. And now that also will mean all my data would have to change. And that is something I might have to think about. But I don't think I'm ready to change my data. So I'll just leave it as it is. 4 pips, 14 pips. The problem with when you change variables in your strategy is once you do that, you have to go back and backtest again to get, because everything you built your strategy upon, you built it on a particular set of rules. So the moment you change one variable, you have to go back again to gather data. That's why I don't do it. I would prefer to take this loss than to go back again. So I'm just showing you how I think when I look at the market and how I believe you should think. So this is just me ranting. But yes, this is the second loss, which is fine. So you have the first, the second loss on the 7th. There was no trade on the 8th. There was no trade on the 9th. There was a trade on the 10th. I because it's my strategy, that's why I took this trade, or that's why I didn't take it. But really, I wanted the market to dip down here, and I wanted it to go this way. But one thing with strategies or the way you trade is, this probably could have just gone, tap down, maybe come deep down into this zone. I've had that in 2024 or 2023. It just came down real fast. I think it was September, either September 2023 or September 2024. Just deep down here. Again, I trade just one pair, so I remember everything. So just deep down and went. It was September, either September or October. I remember I and my friend that we invest together, we were just happy. It was really sharp. So the point is, you could argue, oh, this looked like an uptrend. If you look at the 6 hours time frame, it really looked like an uptrend. Why can't you shouldn't take this reversal? But with the strategy, once you have some set of rules, it's always good to just trade what you see, don't trade what you think, and that's why I added this. So in the month of January, okay, I'm back here. In the month of January, this will be the third trade. And January is always like that, so I'm not that surprised. January and February. So in the month of January, this will have been a loss. And another one. So again, there was a zone somewhere here. Let me just put this. Most likely the zone will be this way. Like this. Again, the market went almost in the favor, 1.5 pips. And it went to stop loss. So this will be the fourth loss. So it'll be on -4. I have 6 more trades before I would think my strategy is not that good. And so then it came here again. We got in for the 5th trade, and this was a loss. But this became one peculiar case, especially when the market is not fast. And it's still something I'm thinking about. Every time I have this case, usually it's when I'm observing. It's not when I take trades. And so when it came here, it will be ranging. Again, it hadn't gotten to the stop loss at this point. But the next day, there was an available trade. And that trade too was dicey. The problem with this is both of them could lose both ways. This could have come here, taken me out just here, try and take us out and go away. So, but what happened was, the trade came as if it was going to take me away. Now, this is one new strategy I was talking about that I'm thinking of in my mind, but let's leave that off. But this came in here and went my way. So we have 1, 2, 3, 4, and 5 losses. And we had our first win, which would be this guy, which is 1 to 3. I'll put it somewhere here. I'm talking like yes. So again, see the problem. So let's say I'm trying to add in 2 pips. So I'll have to put this, because this would be 12 somewhere here. Let me just say I put this at 14 pips, and I'm going, okay, it went my way. But it's just always safe to not add to not change variables mid trading. It's a big problem. So that would be 14 pips, 1 to 3, and that was the first. So 5 minus 3, we have 2. We are -2 in the month. Let's ignore this. I would not have taken this, but I'm looking at that. So the next trade was on the 16th of January. Again, you can always look at my zones, feel free. Now, this is one dicey trade. It was on a Friday. Now, usually this happens in my favor when the market opens somewhere here or here. When the market opens here and it goes in my favor. But with this particular trade, if the market opened like this, I would have lost more. Most likely I would have lost more somewhere here. So this is one disadvantage of those who hold trades. I do it, but again, these are days where you will regret it. But again, this would be most likely 5 minus 2, no, 5 minus 3, that's 2. This will be most likely, if we add this as a loss, it will be most likely minus 3.5, another very big loss over here. So this is how you think real time, even when choosing the strategy you want to choose. So this is minus 3 now. Let's keep it at minus 3 for ideal sake. Then the next trade again, same thing, came into my zone again. Usually when I have downtimes in my strategy is when the market is progressing in one direction and I'm against it. It always would look bad. And I think January, February is always like that. So again, because of my strategy, how I see things, this would be a sell. Although I wouldn't want to sell here. If I were someone who traded in the London session, I would have probably gotten a buy somewhere here and continued the trend. But this is what I do. Again, I cannot trade in the London session. It's my sleeping time here. So yes, this will have been another loss. So we have 3, this will be 4 losses now. And this again, there was no trade on all of these days. No trade. Yeah, I was waiting for the trade to come down here during the zone and go up, but I didn't get an entry. I knew that the market was going to come back here. That's why these green zones are zones that I feel the market will get to, though it was only once last year that the market did not get there. And yeah, but the market eventually got there, and boom, that's where we are. So at the end of the month, I would have lost 3 trades. So I would be leaving the month with minus 3, which is not bad. And so I would update the Excel sheet, look at all of the trades again, and that's it. So the whole idea here is, we must be transparent as possible. In the Forex market, you need to have a clear mind, a sincere mind, where those who want to make it, some people make it from other types of other variations of the Forex market. But for those of us that want to stay in the investment and ensuring that we get our acts right, you need to take in all of these factors when considering your strategy and how you trade. So that's all I have for this video. In case you want to go back in time, I still have videos on this channel way back where I looked at the strategy, and I think I've been trading almost the same way in the past years. But that's it for this video. Watch out again for February. Hopefully I'll get back to live streaming, taking some questions, and that's it. If you've not seen the previous videos where I had a recap, I think this is the right time to go check those videos. See you there.